Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Thursday, January 26th, 2023. Before I jump into the charts, please click like if you would each and every time you watch the daily Apple report. It helps us out a great deal in being found on YouTube. And also, please share the content with friends and colleagues, and subscribe to the Wicked Stocks YouTube channel if you haven't already. You'll be provided notification each and every time this report and the daily Tesla report has been uploaded for your viewing. Let's jump to the charts. I'll start with the big picture. Once again, we came off of long-term support that was targeted since October, the low 120s, and in the process, we had a 1 to 2 month target then in the 140s, which we are pushing into now. And in fact, we did close Tuesday and again Wednesday after falling back below it above the 141.23 long-term descending 1/3 speed line. This area has been considered a ceiling for the last few weeks, a targeted ceiling that could contain buying through February, and from there we could fall back into the low 120s. We may still fall back into the low 120s because I'm not comfortable assuming longer-term bullish continuation into March, April trade unless we were to close above 146.37. So I'll get to that in a second. But for the day, 141.23 may contain, now I've got this labeled as a multi-week level, a 4-star level, and it is still there. But for day trading purposes, you could call it just a 1-star session containment level, able to contain session weakness, and above which 146.37, despite yesterday's break back below it, remains a 3 to 5 day target. On the way up, I've got 142.91, 144.24, and 145.85. All carefully chosen minor points, well suited for aggressive day traders if you are the type who scalps 1 to 3 point moves throughout the day. Holding above 141.23 maintains a bullish dynamic for the day. We may well see 146.37 on an intraday basis. That would be a significant rally, but we've seen them over the last few weeks. And if tested, this channel top at 146.37 can contain buying through February. And from here, we could fall back. As I've been saying, I'm not comfortable assuming longer-term bullish continuation unless we close above 146.37. And if we do, there's a couple things you could do. Either A, stay or get long this stock as we move into the second quarter, whatever that means to you. It could mean buying 170 out of the money calls that don't expire for at least 6 months. I think it would only take 2 or 3 months to reach this upper area, but you never know. It could take 3 to 5 months, and you want to go further out to preserve that delta and be less susceptible to theta, the time decay element. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Downside today, breaking or opening below 141.23 does allow 138.62. This is this 3-week channel bottom that can contain session weakness. In terms of a downward pivot point into next week, I don't really have one unless we close today below 138.62. And we would really have kind of a double sell signal because we would also be closing below the 141.23 speed line for the first time after having closed above it on Tuesday of this week. So closing back below a long-term line study like this after having closed above it, that failure to follow through on strength is in itself a valid sign of weakness as we move into February trade, and certainly closing below 138.62 would also indicate as much. That would be a short-term sell signal in the order of probably 2 to 3 days down to 132.03, which you see I actually have weighted as a weekly support level. So, closing below 138.62, I'd say Monday, Tuesday of next week, we should should then test 132.03, where we could actually bottom out through next week. And from there, perhaps rally back into the 140s again. It would be a settlement below 132.03, and I don't see that happening today. But below this speed line at 132.03, rising daily, that would tell me that we're likely to revisit that long-term support region in the lower 120s, presently around 121 and a quarter to 122.38. But as I showed earlier on the weekly chart, really solid between 122.14 and 122.25. So closing below where are we here? 132.03. You play the short side of the market, or you're not long this market if your time horizon is 2 to 3 weeks. And that might mean buying 120 or 122 out of the money puts that don't expire for at least a month. Once again, it's not going to take that long. You just want to preserve your delta on the way down. 132.03 is good bottom picking territory for swing traders. From here, we can rally back into the 140s within a week or two of doing so. And then inversely, closing below 132.03, the 1 to 2 week swing trader is playing the short side into the low 120s again, where bottom pickers on many different time horizons can have at this area where we could bottom out through February, through Q1, even into later year, and above which this 173.48 channel top remains a late 23 target. Once again, closing above 146.37 would provide this as a second quarter objective over the next 2 to 3 months. You know, I think I've pretty much rounded out. There's not much else to say here. So please click like if you would each and every time you watch the Daily Apple Report, and subscribe to the Wicked Stocks YouTube channel, and share the content if you would with friends and colleagues. I'll be back tomorrow with Fridays. You have a great day.